Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the euro come off here. We had a nice little run up, and then we saw this market turn around and give practically all the and then some back yesterday. And now we've seen a pretty good little rebound here on the euro. Coming all the way down in almost just at this key level here, this 1355 we had on the 30-minute, actually 2-hour chart, I should say, like a mini little hammer. We've started to move higher. If you look here on the exponential moving averages, we actually generated a buy in here, right here in this 1378. We came back, took a little bit of a dip to test, and not even much of a dip. And we've started to reassert ourselves, but the exponential on the 30-minute has generated that buy signal. Certainly, we did start out very low right in here on the 5-minute in the Asian session as we got the clock right in here, and the trend certainly started to move higher. Now we're getting a lot of movement, or not a lot of movement, but meant to say was back and forth with the volatility. We did go in and see a good sharp rebound and would have been a torrential sell-off here in the S&Ps, and saw a really a good, strong, hard recovery. So we're seeing, and that's what I meant as a movement, the back and forth. Now also we saw a very good recovery here in crude oil, and certainly this market had been decimated, even going sub 43 right down into the 42s before we saw a very, very sharp rebound, pretty much spearheaded by what we saw in the equities here. But one market that has already been moving and had moved already and actually reached some key levels already was been here in the gold market. We even got above the, if we're looking at this, looking at it on a daily, even got just above this pivot. But if you look at here on the daily, after this good strong rebound here in the equities, see a little bit of a gravestone doji, and we had actually reached a pretty good key level up in here in this 1279, and really we're looking even on the futures, we're looking somewhere between 1275-ish to 80, 82 or so, and that's pretty much what we got there when you're looking here on the XAU. So I would expect we might even ease back a bit, but going into the year end, I think especially with after the volatility we've seen, and a lot of this is just, and I mentioned this in the chat room when someone was asking about, could we go a whole lot lower, even continue to move lower? And I said, I think we'll keep that downside, but that we'll see some, short covering, good short covering. Well, I didn't think we were going to see something like we saw yesterday in the equities, but certainly it was to a certain extent, maybe not that great, but certainly to be expected to a certain extent here with the rebound that we saw here, but that was far more than I would have even expected. But I'm thinking we're going to see a little bit of that, and I think the dollar, I think Amanda had mentioned she wasn't going to necessarily be looking to short the dollar until after the new year, and I think that's it, is that a lot of people aren't going to go in and try and establish new positions. I think we're just doing, in a sense, the back and forth. We got this euro above the 14s, everything was starting to look hunky-dory, and then we start sliding back in right before Christmas, and then we exacerbated that move yesterday, and then we turn around and we start to come back up. So it's just almost like a back and forth activity as people just kind of move back and forth in these positions, but I don't think there's any new trends per se that are going to establish before the new year. I think people are, especially after the volatility we've seen, are probably satisfied just to come back after the new year and start to reassess things out. In the meantime, you're at the mercy of where this market goes at a short-term basis, and why you have to focus more so on your technicals. We'll just take a quick overview of the news. And always at this time of the day, there's not a whole lot of news. Let me go on and pull up something quickly. So coming to the States, we do have building permits, and we also have the weekly jobless claims. Those are going to be coming in tomorrow. Not tomorrow, but I mean later on here in the States. Of course, later in the session, if you look at the Friday morning from the East, you'd be looking at Japanese CPI and unemployment. As well as Australian housing credit. And coming into Friday, we'll have preliminary CPI out of Spain, also German CPI, UK mortgage approvals, and as we come into the States, goods and trade balances, Chicago PMI, and new home sales. And also pending home sales also. Late EIA stocks, obviously due to the holiday. So as I said, coming to the States, building permits and jobless claims. Let's move this out of the way. So let's quickly just do a quick minor recap. Once again, like I said, I don't think there's really a whole lot of news, and I think the market's going to stay relatively in check. Like I said, we've bounced around here in the euro, but we basically just tested both sides. So as the Australian dollar led the commodity-linked currencies lower on Thursday on concerns about a fresh chapter of trade tensions between the U.S. and China, the broader sentiment remained positive after an overnight rally in global stocks. In the buying frenzy, it's spectacular as the recent rout. U.S. stocks soared with the Dow Jones Industrial rocking more than 1,000 points for the first time on Wednesday. Reuters reported on Thursday that the Trump administration is considering an executive order in the new year to declare a national emergency that would bar U.S. companies from using Hawaii products. The oil price bounce pushed commodity currencies higher across the board, but the latest Hawaii news is a bit of a dampener on sentiment in these thin markets, says Alvin Tan. The Australian dollar, often considered a gauge of global risk appetite and highly correlated to global commodities, was down 0.25% at 70 and 51 cents. The Norwegian crown and the New Zealand dollar were also down 0.25% each. Broadly, the dollar failed to capitalize on an 8-day high in the previous session on the back of firmer U.S. Treasury yields, with the greenback broadly weaker against a basket of its rivals in early London trading. And on to the dollar. The dollar holds most of its gains after the Wall Street rally pushes yields higher. The dollar retained most of its overnight gains on Thursday, but was off its peak for the week so far amid thin volumes. As we mentioned, I don't see a whole lot of, other than just some minor back and forth. And I think you did get some decent ones, Christmas Eve into the day after Christmas, obviously for a good reason, with the rebound in equity markets. But I don't see anyone taking any real positions whatsoever, especially as woolly and volatiles have been ahead of the New Year's Day. I mean, the market will move around, but I don't see anything big. And probably why you, other than the bigger overall move, which was the equities, I think why you want to focus more if you're going to be trying to trade this thing is closer on 30-minute charts if you're looking for some type of momentum or a pattern to develop. But anyway, moving on, it says the swing in higher in bond yields supported the greenback, which was under pressure over the past couple of weeks following a decline in yields, which was driven by highlighted concerns about the slower economic growth and more recently a partial U.S. government shutdown. Investors on Wednesday were quick to latch on to media reports that the U.S. trade team will travel to Beijing this week of January the 7th to hold talks with Chinese officials. I think obviously that's been prompted with the downward volatility we've seen in equity markets. It's interesting to see that they'll be traveling to Beijing, not the other way around. Markets also lapped up data showing the 2018 holiday sales rose 5.1% from a year ago to over 850 billion, the strongest gain in 6 years. Investors are now coming back to U.S. markets after a buildup of a lot of fear mongering this week would be supportive for the dollar as well as treasury yields and stocks. The trade war risk is abating somewhat, so the risk on sentiment should be supportive of emerging market currencies. If risk sentiment keeps improving and Dow futures extend their gains in Asia session, I would expect the dollar yen to move still higher, said Stephen Innes, so he warned that it was too early to call a turn in risk sentiment. Another factor lifting market sentiment was easing tensions between the White House and U.S. Central Bank. White House economic advisor Kevin Hassert said the Fed Chair Jerome Powell's job was 100% safe. Look, that's only because they know that you mess around with that. If you think it's bad now, it'll only get worse. So that's the reason that comment was made. Last week, the Federal Reserve raised rates for the fourth time this year and largely kept its plans to keep high rates next year. And despite heightened economic risk, which prompted President Trump to step up his criticism of Jerome Powell, Trump blasted the Fed on Monday, describing it as the only problem for the U.S. economy. And going on with the euro, the single currency is set to end the year lower by 5% as the weak economic fundamentals in Europe, political tensions in France and Italy, and a dovish ECB have made investors favor the dollar over the euro in 2018. And lastly, we'll just finish up with gold. Obviously, because gold has had, we've finally seen the same play itself out. And still, I expected should be higher, but it certainly has had that rebound, which is primarily getting support on the back of safe haven buying due to concerns about the health of the global economy. Robust sales during the holiday season indicated consumer confidence was not entirely dented by recent volatility in the U.S. markets. The greenback was a shade weaker versus a basket of currencies. President Trump said on Wednesday he planned to wait as long as it takes to get $5 billion from taxpayers for his U.S.-Mexico border wall. Gold has been tracking steadily higher through December, and on the low side, this appears to be good support at 1265, and we expect plenty of buying interest around the 200-day moving average of 1251. Also, as far as the Spider Gold Trust, its holdings rose 2.05% to 790 tons. So that's enough on that. Let's go on and move on to the buys chart. And we're starting to see, obviously, these numbers are from last week, so it's not going to correspond to anything close to what we dealt with. But when we're looking here on the, let's go and move here, seeing the S&Ps with a little bit of a gravestone doji, you can see us start to take a little bit of a dip from here. And really from where that was, it's already dropped off about nearly 20 handles right there. If you look at this closer, looking on the 2-hour chart. Right now, this is what I'd be focusing on more closely would be as we get in to the new year, I don't think any new positions are going to be had, is that focus more closely on your 30 minutes if you're looking for setups or where you see a market starting to go on and change. I think that's closer. So we've already seen now, really once from that same area of the gravestone doji, we've seen this market already come off 20 handles here. I'm going and take a look here with the euro. right here on the daily. We actually came in right into that daily closing support. You see that right here? Came right down there and nicked it right to the pip. 1343, 42, 6. So right came down here and nicked it right there on that closing daily support. And we've since had a decent little rebound. Let's go and take a look at it on the 2-hour chart. That's on the daily. Resistance for right now is going to come in at that 1416. We'll call it 1417 right there. That's going to be the resistance. On a very short-term basis, it's going to come in right there, 1367. You can see here on the 30-minute on the exponential moving averages, we are in a buy mode here. Did shift. We're holding pretty steady here. Probably pretty decent chance that we'll challenge right up to here, this 1408. So on a very, very short-term basis, now the real resistance comes in. We were showing at 1417, but I would expect a pretty good chance for the market to try and make this push up here to about 14, right there, 1408. But it'll be 1417 for the resistance. But looking at that on the 30-minute, we're still in a buy mode. We still got the momentum working for it. I think they can go up here and challenge right in here. Let's go and move into the cable. And just saw news come across the wire. ECB sees global economic slowdown in 2019, which is probably going to continue to work on them not wanting to raise rates. Moving on back to the cable, we're stuck in a fairly tight trading range. Here we are looking at it on the 2-hour chart, and there's really not a whole lot of movement here per se. I think it's going to stay relatively tight. Support though, is going to come in right there at 2620 on the cable. And right there's going to be resistance, 2674. Certainly looks like it wants to go and come down here and test. So 2674 for a resistance today. Not seeing anything really develop with cable here. And let's go and move into the Aussie. Right now, we just engulf this body here on the daily. And the woes continue here for the Aussie. I can imagine, it was just about a month ago, everything looked so cheery, for the Aussie to start moving higher. Well, actually, less than a month ago, we were breaking out. And certainly the whole issue with China certainly weighed on that. Now, like I said, they're looking for that U.S. trade contingent, whatever you want to call it, to make a move to Beijing and in that meeting on January the 7th. So be careful with this one. We could see a nice little rebound. Probably stay stuck until then, but we'll probably keep this downside bias. But be careful. You can start to see, especially if we get some positive headlines. I don't think that those positive headlines will come till after the new year, but we could start to see a nice little rebound here, back here on the Aussie. As far as support, it's going to be right there at 70.24. We're not that far away. 70.24 for support here on the Aussie. On a short-term basis, that's where resistance will come in at 71.06. 71.06. So about 60 pips away. And let's take a look here with the Kiwi. Same thing here, not a whole lot of major changes. I think we're just kind of stuck until we get past this whole meeting on January the 7th, although I think that they're going to find some decent resolution because I don't think the administration has any choice but to find some decent resolution in that. So you're probably going to see bouts of upside moves here in the S&P and then end up giving a little bit of that and then another bout. But we'll see how we play into that meeting. That being said, as far as the support and resistance here on the Kiwi, and going into New Year, into the end of the year, we're just going to test the ranges, and that's going to come in right there. Here, 66.84. And resistance will come in right there, 67.78. Now, this is one market that has definitely retained its direction, and that's here with the dollar CAD. And we're still moving higher. And that key resistance up in here that they could try to attain would be 36.44. Right there. And we're looking actually on a weekly. So it's 36.44. We're next area that we would want to try, possibly attempt to challenge. And that's a tough thing. I'm trying to take the other side. I had even put on another trade back on this, and I already had gotten out of that. Like, I'm not going to sit around on this thing because it's just going in. It's hard to try and fight that other direction, especially in a situation like this where we've already had a, we're coming into the end of the year, and despite which was a very nice, smart rebound here, and the crude oil. Look at this. Huge, smart rebound, and it nearly made a difference here in the Canadian dollar. Let's go and move this back to the daily. I was looking on the weekly. Until you actually see a true reversal here, it's pretty tough to take the other side. And one of the things you want to look for is that divergence. I thought we'd start to see some divergence, but if there was a time to see that divergence, would have been yesterday. And really not so much a divergence in the sense that it just should have gone and followed what we saw in crude oil, which is what led which led the Canadian lower. And now crude rebounds and the Canadian doesn't even give back. That's obviously concerning there. So when we're looking here on the Canadian currency, let's take a look at it on the 2-hour chart. We already saw the third potentially move to 36.44. And on a very short-term basis right now, support comes in at 35.71. Certainly we can break lower, but that's where this market seems to be holding right now. And it's 35.71. And you can see here on the 30-minute exponential moving averages right here as we've turned. I mean, the market was starting to sag a bit. We've quickly turned right back, and here we are, and actually generated this buy here. What was it? It sounds crazy, but at 35.91, we sagged just a bit, but the slower exponential moving average held the market not even that far at 35.87, and look at where we are now. And I think at least until we get past this end of the year, if you're looking for things like that, you really want to focus on the 30-minute charts to see where we stand, and also look at the exponential moving averages. If you're going to try and play this, you're going to try and play positions. I think they're just moving on short-term momentum. Although I think the Canadian dollar is different. It's just maintaining its overall movement here. Now here on the dollar Swiss, we're getting a bit of a mixed bag in here. You look in here, you get this engulfing line. Okay, everything's terrible. We do come back off of the lower wick, and then we turn around, and the next day it engulfs going the other direction. I mean, as far as engulfing the body. Okay, everything looks like things are settled. Then the next day we turn around and go right back down. Then the next day we turn around and engulf that body and go right back up, and then we're kind of sagging. Just a mixed middle of the road. This is probably more indicative than others, is what you're expecting as we go into the end of the year. And while I was talking about the short-term momentum, you go down, then you're up, then you're down, then you're up. Now you're starting to slide back down again. So I don't see anything as necessarily breaking into any new areas. It's just pretty much short-term momentum. You're kind of seeing that here on the 30-minute exponential moving average, where you see here you're on a pretty good clear buy path. You get the sell, and the sell comes in fairly early, and it stays with that until it flips to the buy, and boy, does it run like crazy, and now we're just mixed bagging it. But that's what I'm saying. If you're going to focus on that or try and trade in this type of environment, I think you have to focus on the 30-minute and focus on that short-term momentum. So when we're looking at here for when we're looking here on the 2-hour chart, and you can see we're well shut down. One moment. I just saw something that Steven Stelios was posting. But anyway, getting back to this, as far as resistance, we're just in a tight bag, and right now we're going to go right here coming across. So it's going to be 99.62. It's still quite a ways away when we're looking on this 2-hour chart. Here's the lines coming across, but we even gotten beyond that. I guess right there, which is 99.50. 99.50. And support on a very short basis would come in right there, 99.84. But like I said, this is one market that, like I said, up and down like a yo-yo. I don't see anything that'd be advantageous to doing something here with the dollar Swissy. Although Amir's has done a pretty good job of trading this. On 98.84. Okay, let's go and move on to the dollar yen. We almost not that far away, and although it's been an okay rebound, you probably would have expected more in light of the huge move that we saw here in equities, U.S. equities. Obviously, huge support here at that 1004. And we did get just past the 38%, and that also happened to be a level here, that 1075. We're at 1087. But, you know, you almost would have expected, I'm a bit surprised that we weren't able to even make it up here to 1186 in light of that rally. So certainly the things look a bit woeful here with the dollar yen. We'll take a look here on the 2-hour chart. That's on the daily. Resistance is going to be right there, 1120. $11.20 for resistance on the dollar yen. Support's going to come in right there. Right there. 1056. 1056 for support. Same thing here with this 30-minute momentum where we've been on the sell signal here just right before Christmas and stayed there. And even here when they kissed the 2 exponential moving average, we still continued to remain on the sell mode. We got down fairly low, and then we flipped to the buy mode right here into 1084 and stayed that way. And actually it's retained its buy mode. If you see, it's still above it, but obviously we made a pretty good run up in here. Looking at the 30-minute, the resistance came in at 1140 right there, 1145. The market got up as high as 1141. Saw a pretty good retrace back. You can see as we dipped below where the exponential moving averages were, they were still on a buy mode, so we saw a rebound. Now we flipped now to the sell signal. Actually flipped here on the momentum here. Obviously, like I said, if you're going to be trading the dollar yen, you're going to be looking at not only the U.S. rates but also equities. And as much of a nice little rally this was, it's a bit of a disappointment considering how far the U.S. equities had rebounded back. The analysis is going to be, rather quick today in the sense that I don't see anything developing other than, like I said, these short-term movements. And once again, I think that if you're going to be looking at these short-term movements, your best bet is to be looking at a 30-minute with the focus on momentum that could come. I guess you could look at RSI or stochastics. I feel more comfortable looking at the exponential moving averages. Getting back here with the dollar index. We're looking here on the daily, very good smart rebound as we got into, moved in towards Christmas. And we've even rebounded back, the day after with USS that started going and find some attraction at those lower levels. And they thought, okay, well, the yields are still going to go higher. So we're still hanging on here. And we've done really well hanging on close to 97. Same thing, a little bit of a although more on a positive side, a little bit of a back and forth. So we'll take a look at where we stand here on the 2-hour. And here's it back to that 96.79. I really want to get rid of this one. Let's see. There we go. And you can see it's just, we had this nice rebound here to this level. Okay, we come back and then we rebound a little bit higher, and then we're gapping a little bit lower, not much. But once again, there's no real big impetus to move to a major level. And if anything, you would have expected even a bigger move after what we saw in the equities yesterday. That being said, currencies haven't moved the same extent as you've seen other markets going and move. So I guess that's going to keep it within a tighter range despite this volatility. But as I said, you see this sell-off. We drop down here. It looks like, okay, now it's over and done with for the dollar. The dollar comes back. We turn around and dip back. Oh, I guess it was just a fake out. Then we come back and we take out those highs by a few pips, and here we are start to slide. And I think this one market is probably, because unlike the Swissy, a lot of focus is on the cash dollar index. I think this one market is indicative of what I think we're going to see going into year end, which is, like I said, you see the market, okay, just like the euro. Remember, this is going to be at the same time the euro was around 1440. Okay, now the euro is really going to take off. Then the dollar comes back rather smartly, turns around and ends up giving it back, okay, or most of it. Okay, well, it was a fake out. Then we turn around and give back a little bit. Okay, we're just going to sit there and we make new highs, and here we are sliding back. I just don't see any big movements. It's all just going to be smaller movements. I think the best outlook will be focusing on a 30-minute. Looking on the resistance, it's going to be right here, just pretty tight. It's actually right there, 96.99 for resistance. And I don't think that's range anymore. That has flipped to bearish for the dollar yen. Support here coming in at 96.56, actually a little bit lower. We'll go with that, 96.55. And you can see here on this 30-minute, there just doesn't seem to be any kind of a, not necessarily a fluid movement, but you can see it's very herky-jerky. Let's take a look at here on the exponential, which is probably going to be a mess, I would think. And as I said, very short-term movements. When you get that buy signal, look where you're going to be looking for resistance, and this, vice versa. Same thing with the support here, but it doesn't last very long. Let's go and take a look now with gold. We made it up to the bias pivot, this 1267. We got above it. We had come very close to it. You can see here days before Christmas and came back. We closed just above it. We held its own, but we got a little bit of a graystone doji here. Now, we'll have to see how today plays out with equities. I think we're going to still see a lot of volatility. I think that, as I mentioned in the chat room, when someone was asking if we were going to move, even lower, I thought, well, I think the downside is still going to be a good pull into the end of the year, but we're going to see some short covering bounces, strong short covering bounces, but certainly I didn't think anything that like what we saw yesterday at all. That being said, that may kind of keep this in check. Once again, a lot of these markets I think are going to be kept in check until the end of the year. Once again, I'll say the same thing. I'm surprised that gold isn't even higher as people would start to move some assets into gold. Surprises me that this hasn't even made up closer to 13. So we may see a bit of a pause here. Resistance, when we're looking here, comes in, well, actually right there at the 1279. You can, and I'm going by with this bar right here. We'll take a look on the 2-hour chart. Really, the resistance comes back right at that top, which is 1278. Still a ways off. We'll take a look here on the 30-minute if we see anything in between. There we go. Let's see, right here. A little solid line there. So the ability to push up. We'll go right there. It's actually 1274 3/4. We'll call it 1275 for resistance. With support coming right there at 1268. Pretty good run here in the 30-minute exponential moving averages right here, generating this bind, still staying there with that. Now we flip to the sell here, and now we flip back. Generally, when you see a move like this, generally what happens is it causes a bigger move. Okay, so usually if you see one move, you get. Although this was extended, it wasn't that short of a move, but quite often you'll see this. Because what happens is people get, generally it's a little bit longer term basis, but you'll see people, they get short and then they turn around and then they end up getting stopped out, and then the market has a bigger sense of momentum. I guess that could happen if people try and move a little bit more assets into gold. But once again, like I said, I'm surprised gold hasn't had a bigger movement here. But I wouldn't see same thing here because of volatility of the year. I think this 1274 is going to work. 1275 has decent bit of resistance, although we have flipped on the buy side here as far as momentum here on the 30-minute. For this one at this time, I would leave this alone. I definitely wouldn't try and play this from the short side at all. But once again, take it with a grain of salt as we move into the end of the year. I don't know that people will be trying to put on positions. We've already had a pretty good run to start with. A little bit late in the game, but I wouldn't short it. I'd be looking for dips back into the beginning of the new year, especially if we see a rebound in equities based on that, meeting with China on January the 7th. That may allow gold to pull back, and then at that point we'll be looking for areas to step in. And those areas to step in, we can see the 1250 probably be coming in around 1243. If we can dip that far back, we'll see the kind of response back we get with U.S. equities. Taking a look at bonds. Wow, what a mercurial run that we've had at bonds when they had been decimated for so long. Resistance. Right there at 45.19, and I'm not sure that'll make it that high unless we start to see equities pull back again, but we'll go with 45.19. Well, you can see where the support came in, and that's 44.13 right there, actually 44.12. I don't think there's any doubt where the momentum's gone here. And the bunds, they themselves have been on a bit of a roller coaster. After making that huge run up here before Christmas, a few days before Christmas, it looked like maybe we'd start to lose that momentum. And when you look here on the exponential moving average, once it got that sell signal, that sell signal stayed in place until just yesterday. We finally turned things around, and you can see it start and got this buy signal right here at 62.27, and since we've had a pretty good run up after that. We've already come a long way in resistance. I'm not even sure if it would make it that high unless we see a pretty good equity pullback, but that would come in at 63.24. You're going to have to get a little bit more room here on the downside for support. And you can see this coming right across the top and comes right across these touches. And even just a hair low right there, which is going to be 62.93 for support. Some good support here this is on the weekly at 10.403. We'll go right there. We're going to give it an extra little push. It's going to be 10.378. 10.378 here on the DAX. And don't forget, we just saw the ECB sees global economic slowdown in 2019. That just came across the wires about 45 minutes ago. I still think that they'll want to try and make that dip below 10,400. If we can get this pull down here in the U.S. equities, I think there's a good chance we can make that 10,378. As far as resistance, right there, it's going to be a 10,565. Yeah, this market has got to close above 10,527 just to try and slow down the bleeding. One thing that we all do have to also have to take a look at that we haven't, once again, we talked about the smart rebound in oil. This is one heck of a rally. And I'm surprised, like I said, that we didn't see more from the dollar CAD. I would have expected the dollar CAD probably to be in the low 35s, make move down to 35.20. Instead, it's 100 pips higher. But this is one heck of a rebound here in crude oil. Almost like a little bit of a gray stone doji here on this 2-hour chart. We come down to test it, and actually a little bit below initial support, which that initial support would come in at 45.12. And that 50% would come in at 44.51. And that would coincide with some support right in here at 44.38. We talked about this. We do have a resistance here at 14.17 on the euro, 14.16, but I think we'll try and make that move up here to this 14.08. The momentum is still moving higher here. Gold, we have some resistance coming in, as I mentioned, around 12.74. The dollar index, I don't see a whole lot of movement. I think for the most part, most of these markets are going to be kept in check until we get into the end of the year. Cable has continued to move lower here. You see here, we were looking for 26.20, I believe it is. Yeah, 26.20. And we've continued to move lower here. We got as low as 26.24. But that wraps up the European crossover webinar. Post this in the chat room. And thanks for joining us here on the European crossover.